This is the life-changing video you needed. You won't regret watching this video. As you can see right now, this is a very powerful indicator, and when I used it, I started losing and I wasn't understanding why. Whenever a candle breaks above this field area, this area in red, it means that the market is bullish. And when you buy here, the market intends to go up and you make big profits, all right? You get here, you enter your long position like this, you put your stop loss below this field area like this, and then you take profit up there, right? Okay, there we go, you lost. I started trading like this and I lost a ton of money because the person who gave me this indicator didn't give me the most important information about it. And if you're trading like this, you end up losing. Now, let's talk about how you should be trading using this. When trading this, you got to use it with liquidity. So this is how you use it with liquidity. You don't need to analyze a lot of things. The indicator itself has everything built in. As you can see here, the liquidity will immediately turn on, and now you can see liquidity down and liquidity up. So it's clear that we have a lot of liquidity up, and this liquidity here is liquidity from the sellers. So the market wants to go up because the most of the liquidity is up. But whenever you see that the most of the liquidity is down, of course the market wants to go down. So here we know that we break above the field area and the liquidity is up. So it's very likely that the market is going up. So now this is a legit reason to buy, all right? And then you put your stop loss below the field area, right? And then you want to take profit around that accumulated liquidity up there. And there we go. It hit your take profit. This is exactly how you use this. And when I started doing this, when I started using liquidity, not only seeing the candle breaking above and starting to trade, I made a lot of money. For example, here, this is another example. Let's say once again, I see the candle breaking above this level. Am I going to take a long position or short position? As you can see, we have a big gap here, right? Big gap, meaning that around here, there is almost zero liquidity. Yes, there is liquidity, but not as strong. But down here, we have a lot of accumulated liquidity, meaning that the market doesn't want to go up because it only has this much liquidity, and this liquidity there is very, very far. Of course, taking a long position here is down because the market wants first this liquidity down, and indeed the market went toward the liquidity down. And then is when the market started rising. After taking that liquidity down, you can see that we took that liquidity, and then when we saw this break was actually when the market started to rise.